So here are three financial reports that every law firm should be asking their bookkeeper to provide. It is the income statement, the balance sheet, and the accounts receivable report. Now, of course, there are other financial reports that they could provide, but if you're starting off, I think you should really focus on these. Now, what the income statement is going to tell you, it is going to look at all the money that you have coming in or the money that you've earned. That's going to be your income. And then it's also going to look at your expenses, all of the money that you have going out. What are you spending your money on? And it's going to give you some clarity on where your money is going. And when you add those two together, or you take your income minus your expenses, that's going to tell you what is your profitability. And that's what your income statement is going to say. Now, your balance sheet, on the other hand, it's going to give you a different perspective because it's going to tell you things about how much cash do you have, how much cash is in your trust account, which is very important to make sure that that stays accurate. It's also going to tell you things about your liabilities. It's going to tell you about who do you owe money to and how much money do you owe, whether that's your accounts payable or whether that's loans or credit cards. And now, the third one that I mentioned is the accounts receivable. Now, accounts receivable is actually a part of your balance sheet. But the reason why I pull it out is because you want to get an even more detailed look to see who actually owes you money. Because your accounts receivable simply means that this is money that you have earned, you have done the work for, or you have sent out invoices to your clients, but your clients haven't paid you yet. So one way to think about that is it is money that should be sitting in your bank account, but at the moment, it is sitting in someone else's wallet. So you want to make sure that you're keeping an eye on that, because if you start to run low on cash in your firm, you won't be able to do the things necessary to keep your firm operational, which means that you're probably going to run into issues. So you want to make sure that you're staying on all three of these reports: your income statement, which is going to tell you profitability, your balance sheet, which is going to tell you things about what you own versus what you owe, and your accounts receivable is going to tell you specifically who still owes you money, so you know who you need to have a conversation with if they have not paid.